Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording December 16th in the afternoon. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. How you doing, Barry?
Doing pretty good. Another week under the belt.
Another interesting week. Only 2 weeks left in 2022. Can you believe that? Absolutely crazy. Insane. Today's show, Barry's going to cover the big six, which is the ES, bonds, crude, gold, the dollar, the euro, and copper. I have a very, very short list today. The commodities, which I'll get into, are in various stages of correcting and setting up, bottoms here for the next big run, just not there yet. But we will review silver, sugar, and cotton this week on the commodity front. We're going to start, as I always do, with Bitcoin, but going forward, maybe in 2023, we're going to change it up because this thing has gone to sleep for the last 6 months. I was telling Barry, the only thing I really saw noteworthy this week is we had a little false break here on the 15th. We pushed up, made a higher high than we made in November, and then immediately reversed. And the other thing to notice, hopefully it's a pickup, portending more volatility, is the bars got bigger. The last two bars, Thursday and Friday, the bars are, relatively big compared to this mess that we saw in here. So barring any pickup in activity in Bitcoin, we're going to start, covering something else from the get-go. If you have any suggestions, obviously hit us on Twitter, hit us in the comments of what might be a good market to start off that could show either the fear or the greed in there, because originally we used Bitcoin to show sort of the speculative excesses in the market when we started talking about it and on the way down, which, again, the beautiful thing about it is the squares nailed it. I mean, look at how this thing stair-stepped down.
Right.
In the squares. So if you have any ideas, throw it out. Otherwise, next year we're going to come up with something else to open up here that
maybe the NQ, right?
Maybe NQ. We do cover NQs, but maybe NQ.
Or the Dow. A lot of people trade the Dow, and
we could throw the Dow in there wherever there's action, and we can use it as a kind of a proxy for risk. That's the idea. Anyway, let me throw it over to you, Barry. Let's get into it. Very interesting moves this week with CPI and FOMC. So let's cover it all. There's the false break we always like to look for.
Well, we got false breaks everywhere. Yeah. So many markets have false breaks, and it looks like if that's how we're going to end the year, so be it.
Right.
Full of false breaks. So getting back to the S&P, let's see. We got, this is serious stuff. We got a lot going on. A lot of people are just spinning their wheels. And you can see why. Look at that.
And that was a month. That was a month's worth of garbage that went on.
Month's worth of just spinning the wheels, right?
Yeah. If you were chasing in that month, you got killed. If you tried to buy strength or sell weakness, you got killed.
Right. No question. Unless you had these had our levels on with you, then at least you knew when to unload and when to reload, right?
Correct.
So and we know we had this box drawn out. We had these levels marked out a while back, and actually as we got into it in the very beginning. And
it was great for framing the price action. It really was.
Oh my God, saved our butts, right? It's
absolutely
not just saved our butts. We helped us make some money, not trying to trade the trend here.
I mean, the key thing is with that box, when your emotions start kicking in, like when it's starting to run up and you're like, oh my God, I'm going to miss it. It's going higher. And that box tells you, hey, chill out, pull back, wait, right. Just wait, see if it clears. And it saves you.
And look at the symmetry here. What a triangle we're putting in.
Oh, one of those,
and not just a triangle, expanding triangle, right?
So, yeah, the worst kind.
Worst kind, and that's just here. This could get steeper. Who knows?
Right.
We'll have to see next week. But you know what? We're into geometry and squares and all this stuff. And looking at geometry, I was just looking at these two highs, and I figured, hey, let's just draw a box. Because that to me, that overrun looked very close to the run down here, how we did today,
Yeah.
right? So if you take that and just duplicate it and look at that, right?
Voila.
It's right there.
Yeah, right
It-
there.
It's almost the same amount. So the reason I looked at it, I said, well, maybe the amount of break would give us a clue. And to look, it's exactly the same.
Right.
All right.
No clue.
No clue. All right. Don't give it to us there. All right. So it's a pretty much exact same penetration on both sides. So either one of, like, this was a false break for sure. We talked about that. And so this could be a false break. You know, we'll see. Let's try to figure it all out. We left it, what the heck? What did we leave it last week? 39.40, right? I think that was a level to watch. Yeah.
39.16 was your support. That was
16,
the
right,
yeah,
right.
16. You moved it to 16.
Oh, that's right. Let me, so I didn't save that chart.
That's all right. 39.16 was the level.
There you go. That's right. That makes more sense. Looks better.
And
actually.
40.38 was your resistance. Yep, right
Right.
there.
So 39.16, that was the balance point for last week. We held it and we were looking, if we broke 38, we were looking for a challenge of the 90 degrees up and then eventually 41.40.
Right.
All of that binding upon, you know, how the market handles all these levels. We had 40.90 as the 90-degree mark. And then we had the 41.40 over here as the, you know, major resistance. And what we did was you came up and you can see this date right here exactly on the 180-degree line. We did a false break right there and we called it out in real time. You know, that false break, after that false break, not being able to hold above, forget 41.40, we couldn't hold above the square of 90, right?
Right. That was huge.
That was huge. And it was pretty much the same play as we did here. You know, we went up in a mad rush, but couldn't hold above the square, broke down. We pretty much did it here, you know, went up in a mad rush, did this little triangle and
Broke down. Yep.
And here, you know, it's a different pattern. It was a different play, but still you can see how the 90 was a major, you know, 3 out of 4 times that was the case. And we had it here. So we knew right after that we couldn't make it, and we called out that to be a false break. And if that's the case, we're probably going to go back and visit this 39.16, this area at the bottom. And if that goes, we had, you know, 38.25 as major support. It's probably 38.25 to maybe 38 by now.
Mhm.
Maybe change that. So that's what we're dealing with. Where do we go from here? Let's see. The easy pick would be down, eh? I mean,
That's what the weight of the evidence is right now.
I mean, we broke the uptrend line. We had really good timing here. And that timing, actually, we should probably take a look at it for you guys. No, it's not here, but well, here's the chart we were using during the week. And this 90 was the support. And you can see coming off the high, this high. And, you know, we broke through that also. So that wasn't there. But what I wanted to show was, you know, we've been running these 60, we've been running, you know, vibrations of 60, 30, 15, all through this down move. And we had 60 degrees from this, the initial low over here to this high, we had 60 degrees. And then we had 60 degrees from this low, the false break, to this false break. It's funny how the geometry kind of all of a sudden gets a grip, and it's amazing to watch, like, how it's going to pan out. So, you know, that being the case, it sure looks like the move is to the downside from here, at least going into next week, at least for next week. And if we look at the weekly, I mean, we got this big old outside reversal.
Yep.
Right. So, I mean, what else are you going to call this? It's not an outside reversal to the upside. So we have to deal with this. I think it's the way this is the downside. We had this 38.96 basis weekly, really key important point. And we kept talking about this 52, how last month and a half, price just kept going back and forth right around it, which wasn't giving us any clues. But watching the lower time frames, looking at that daily reversal bar, and the false break early on in the week, that helped us kind of figure out which way the market was going to move. And looking at this outside reversal, I would say, basis weekly, at least this 39.75 area has to be considered to be major resistance now.
Mm-hmm.
Even though we crisscross, we have to kind of use that as a sort of a balance point for now. And going back to the daily, I would say 39.16 definitely comes back into play. I mean, there's nothing else we can do.
Right. It's now resistance. Now it's going to be resistance.
It's now definitely resistance. And you can see, I mean, we have a hell of a, sort of roof put into place. So no matter what happens, unless there's something really unexpected, this 39.16 is going to be a heavy weight hanging overhead. So let's watch that.
I mean, essentially, you got a month's worth of price action above it.
Yeah.
So that's overhang.
It's quite a bit.
Mm-hmm.
And we saw the weekly did an outside reversal, and this is taken off. So the reason I brought up 39.16 is the next counter trend is the one to watch, right?
Mm-hmm.
It's always a counter trend. I mean, if you take it the high, here's the counter trend. Take this high, there's a counter trend. It's always there. This high, there's a counter trend.
And it's 1 or 2 days only, and then it gives it
Then
up.
it goes, yeah. And this was a triangle, so there's a triangle break.
Mm-hmm.
Anyway, I would watch these counter trends, especially counter trends that stall out below 39.16,
mm-hmm.
which is not that far. I mean, we came up intraday, we came up to 39.16 towards that once this morning, and then we came up towards it to 39 towards the end of the day. Couldn't make it, right? And if we go penetrate a little bit higher, fine, but we're looking for the next counter trend is what we're looking for. And for some reason, by next Wednesday or so, we happen to settle above 39.16. Well, great. We're just gonna,
chop
chop right through
to
the end of next week.
Mm-hmm.
We'll see how that goes. And yeah, so that's it for the S&P. I think we looked at the weekly. I don't think there's much more.
Yep.
This false break is a big tell. And here's that other high I was talking about earlier, right there.
Mm-hmm.
So if you you can see that we just barely broke above it, right?
Mm-hmm.
So all that we have to take into account. And let's see. I mean, we might do a perfect 52 weeks, high to low.
Could be.
Wouldn't be the first time. So
no,
we'll watch that. Yeah, that's all I got for the S&P. Anything else you want to add, or if I missed?
No, I think you covered it well.
All right, moving on to bonds. We are looking at almost a year, 720-degree line in time.
Mm-hmm.
That's 8 squares of 90.
Yep.
And we perfectly ran up into it in this counter trend move. So I think that might be it for the bonds. We were looking at this 132 for a long time as major resistance, and it certainly proved out to be fairly strong. There's no question about that. And
you even got a little false break there too, Barry.
Yeah, got a little bit of a false break. So we'll see how next week pans out. For now, that's it. That's resistance. And I think bonds might, it's famous for going sideways and kind of doing a slow grind. It might do all of that. But getting past the 720-degree point, we might get a turn to the downside. So we'll watch it closely. But 132 is the one to clear or not clear.
Mm-hmm.
We'll just keep it simple. And looking at the weekly, here's 144 weeks.
Man, look at that.
Yeah, it's beautiful, right?
Right on time.
And earlier, and the beautiful thing is, we made equal moves here.
Yep.
Both of these legs are exact, almost to the tick.
Mm-hmm.
And we're coming up exactly 144 weeks high to high here.
That's big.
And this it's big, and we got to watch it. And 132 is the level to watch. See if we're going to break it or not. Yeah, we could do a little bit of a false break or something, but that's the level, right? We ran up, and boink, that's it. We stopped.
Mhm.
And so the next leg could be down. So we'll have to watch it and get positioned properly. For now, that's resistant, it's stalled, and we're not recommending getting long in here. So that's kind of the story. Anything you want to add to that?
No, I just the weekly support is around 131. So we know we got pretty tight bracket there with 132 on the upside and like 130 and 3/4 on the downside to watch price between there, you know.
Right. That's fairly tight.
It is
And-
really so
Yeah, we'll leave it at that. There'll be more a fun time to the downside later, but for now we'll have to just pause here and wait.
yeah. Yep.
Moving on to gold, doing surprisingly well, right?
Mhm.
After this all this drama down here at the half square.
Hmm.
So we pulled out of that and we managed to stay above 1730. And we're not bouncing off of 1814, this level up here, and we're kind of hugging this 72 in the strongest way, but it's okay. It's
Mhm.
okay. It's hanging in there. And as soon as we can settle above it, where the lows are coming in above 72 degree line, which is 1795 or so,
Hmm.
and 1814, I think gold is going to be ready to go up and challenge this 1915, 1940 level. It's ready, you know. I mean, it's there. It looks good. Structure looks good. The only thing I saw was this potential false break here,
Amen. I saw that too.
right? But it didn't really follow. There was really no big follow through. So it was okay. I mean, it didn't really pan out in the way a false break should, like down here, right?
Hmm.
You see that shootout, that was classic.
Yep.
Come off that low. And here's another one, you know, coming off the low, very strong. So we'll see how it plays. For now, gold is sort of holding its place.
Hmm.
Looking at the weekly gold. So the critical level here was really down here. You know, we had this 1651, 1670 basis a weekly, and then we did ABCD down. That was sort of a, you know, sort of a, you know, not a classic washout, but it was definitely testing.
And definitely grab some stops.
Definitely grabbed some stop and definitely testing. And I remember the psychology sentiment at that time. It was very negative, right?
Very negative. Yeah.
But it managed to, again, do an outside reversal here on this bar and move higher. So it looks okay. And basis weekly, it's okay above 1767. We're doing okay. I mean, the big level to watch is this 1881, 1819, this range up here. So we got plenty of room to get up there. And long as we're above 1767, I think, again, it's kind of like in accumulation mode. So we can leave it there for now. Normally I do crude after bonds, but switch it up this week. We got under the 73.50 level, ran back up, but we're really stuck between the 144 degree level, which is right there, and 73.50. And this is, you know, it's not the strongest place to be. If we take out 73.50 next week, I think we're going to make new lows. So watch out for that. That's important to, you know, that could be new lows for the year, right? So
yeah, and that's funny you said that because I was looking at crude and I was saying, you know, we could use one more push down just to clean everything out and then go. We're close. We're close, but not quite there yet.
Yeah, sentiment's still a little too bullish, right?
Mm-hmm.
But so watch 73.50 next week, and if we do take it out, we're probably going to go up and make new lows and probably end up. So the big support area we drew out last week, which I guess I really didn't save that because we drew this out to over here. That's really the big support area. It's right around $60, and yeah, it's right there. We'll see how that works out. All right, let's take a look at the weekly crude. Not so hot.
Keep stuck, man. Stuck below 45.
Yeah, I mean, this week's high was right at tapping the 45 degree line from the high, right? So really couldn't do anything there, you know. And we talked about it the week before, how, you know, majority of that bar was under 45, wasn't looking that strong. So it's, you know, oil continues to look weak, and we'll follow that. Nothing Well, short side might be good. We can catch that on an intraday, some kind of a setup, low risk. Other than that, now if we hold 73 and take out the square 144, which is 78, and settle above somehow, and I think we're off to a whole new leg, and we're going to be off to a whole new leg eventually after all this correction.
Yep.
So it's just a matter of getting down to the final low.
I mean, it's what we do. We try and triangulate, a longer term bullish market, triangulate those lows and figure out where to get in with the least risk.
Yeah.
And crude is a perfect example of that. So we're just trying to find that low.
And looking at this 144, you can look at the bigger picture here. This 140 is really important. It's a really good balance point. So that's around 78.50 or so. So we'll see. As long as we're under it, it's definitely soft. No question about it. So copper, just like you were talking about commodities, everything is sort of on some kind of a correctional wave, let's say. Now, even though the overall pattern, we've been making higher highs, higher lows and higher highs, so higher lows through here and then higher lows and higher highs. It's starting to stall out. If this was actually a start of a bull market of some sort, we should have taken out the half square, settled above, and then, ready to move. But this still looks like it's not ready. And so my take is to let it finish up the consolidation, and we'll pick it up on the other side.
Yeah, it's again, it's like just like crude. We're trying to find that spot where, where we have a lot more evidence stacked up that the low is in, and we can jump in with good risk reward. It's just not quite there yet. Like one more push down, like a false break push down that would take out those lows with a false break would be perfect.
That would really do it.
So
if it doesn't, and we continue to work a tight market and triangulate, this would be a perfect place to break out of this compression.
True.
To the upside. So or false break and then to the downside. So
right.
We'll watch all of that, but we're not quite there yet. But for now, it looks like it's consolidating like a lot of other markets. So we'll watch that. And looking at the weekly copper again, we got 2-3 weeks kind of in the same area, not much going on. Although the lows kind of are holding fairly well. We had the low, higher lows, and now we're kind of stalling, and we have a lower high basis weekly. So this whole mess, and this was a proper third wave. Let's say 1, 2. If this is a third, we should be just really moving, and we haven't done that.
Agreed. It's leaning more towards like a 4 on the way down.
Yeah, exactly. So crude copper has more time. You just have to let it go for now. Dollar really quickly looks weak. We keep talking about it's going to be weak under the 72-degree line, which is 105. Let's say 105, 106. And long as it's below 106, it's weak. And I think there's probably more to go. Base is the square of 72. Now I happen to I have another chart with the square of 90 on it. And you can see we
look at that.
Yeah, we tapped it perfectly at the 90. So this is something to notice. And we'll see. We got 5/8 in time, and we have a full square. So that's a square to notice. It's a good one to watch. So let's see how it performs. But it looks like it has more to go. Since 72 is the square it's been running with, it's important to look at that. And if the 90 works out, great. Let's break the 72 and show it to us, and we wait for the next counter trend to get on board to the long side. So for now, we'll leave it at that. And looking at the weekly dollar, same thing. I didn't have. It did come into a quarter of the square. Might be good for a little bit of a pop, but it's not sort of the grand finish we want. Before we start another leg. Again, we'll watch that for a bit. But keeping in mind, we did the 90 there, and we do have a quarter square here on the way down. So it's important to watch those. I just don't know if it doesn't feel like all the drama is finished with yet. We're not done with it yet.
Yeah.
But we do have to note that low. All right. Euro, well, the euro we were expecting, after we broke out of here, we were looking for a test of the half square. And we said if the, half square gets taken out, which it did this week, then we're going to look for 108 is really the big number. So 108 to the 144 square coming off the high. And that's around 109, 109 and a half is really where the next resistance is. And well, that would be perfect. We basically come up 144 degrees. It'd be 50% retracement, which is the retracement to watch in bear markets. So if we can get up here, boy, that's going to be a hell of a trade. So for now, we have to be patient and see how that works out.
And see if that half square holds too.
Yeah, half square holds, but it could come down here. But this is such a magnet, especially being the 50% of that big move.
True.
You know what I mean? So yeah, we'll watch the half square for clues, and hitting here would be just a hell of a trade.
That's a fat pitch.
Yes. Yeah. Let's wait. You got to be patient with these.
Yep.
And looking at the weekly, well, we took out the 90 and we went down a square and a half down into this area, and the correction looks pretty good. So that looks like a 1, 2, 3, right? That's a clean 3. Maybe you do a 4, maybe a 5th failure, and then eventually turn back down again.
Right.
And we'll see how that turns out. So looking at a square of 52, it was just, it wasn't really that great of a, I didn't think it hit that well.
No.
72, we went down 144, which is a 288 we were watching on the daily, and that will be the rally point that we were looking for. So maybe we'll watch it on this for now. Yeah. Anything you want to add to this?
No, I think you nailed it. We just got to watch those 2 levels on the euro, see if it gets up there.
Right. Exactly. So that's a bigger picture coming off the other high in 2018. And just for fun, let's take a look at it from the other high, from the highest high, 2008 high.
Right.
And, that 288 we talked about, because these lows came in right at that time, right? And yeah, we broke through coming back. So this is just about right. If we go a little bit more right into this area, that would give us a good spot for this last leg down.
Sure.
Yeah, just have to, the overall, I guess the feel is to really watch it, because everybody's been sort of caught off foot this week in a lot of markets. Bonds basically grinded in there. S&P grinded in there. Nothing really, no movement. Other than getting whipsawed, right? So I think next week we really have to watch and maybe not get caught too early in some kind of a potential trend. So let's see how it finishes up next week. And if you guys like our work, please click the likes and share our work, share the links and subscribe. And also follow us on Twitter, because we do daily updates, and Ben makes lots of updates during the day, lots of info. And let me put it back to you, Ben, cover all the commodities. Well, Ben, I like that expanding triangle you got in there. It's just like the S&P. Right?
Yeah.
And usually they don't, I don't like them. They're just trouble, right? Till they
very sloppy.
Nothing but trouble.
Yeah. The thing I liked about this pattern is it's like a class on technical analysis and squares and what's going on here. You got a 3 drive pattern, right? 1, 2, 3 pushes higher.
Right.
You've got a false break here where we closed down after making a new high, and you've got back testing a broken trend line and back testing a full square here with that bar yesterday.
Yeah.
So
levels are working.
Yeah. So the levels are working well. Our low today was on the half square. The high yesterday was on the full square. This is beautiful work by the levels, because it helps you define, what's more probable to happen here, what's more probable to happen here, and it gives you an edge, because it gives you an idea of what's more likely to happen. So overall, I think this was a top. This is the top of this bear market leg. We've reversed and we're heading down. Now it's a matter of, can we hold this? Like today, the low held this half square. By the way, all of these levels on a Google Doc spreadsheet, link to, and you can go see the levels for this and all the markets Barry covers and all the markets I cover. So the levels are there. This is, the line in the sand is here. They've got to hold there. If they can hold here, maybe they can chop here, get back up to the full square. But to get it push again, they have to close over the full square. You can see how difficult it's been over this last month to get that. It may happen a couple times.
Right.
So ultimately, I think the weight of the evidence is down right now. Then this is the next battleground. We saw a little bit of that at the lows today.
Right.
We get below here, then it's back to, the lows we saw in October, the washout low. So it's not looking bullish. I think there's a lot of really good things you can learn by watching how price acts in these patterns, especially this. But, I don't know what else you have to add, but to me, it looks like, we're going to bust that half square and we're going to head lower.
Yeah, man, these expanding triangles are, always tricky. And but this one looks like it definitely had a weight to the downside, so we'll have to see. But that's why we use pattern and levels, and we use squares and cycle timing. So, you got to put it all together, sort of like the military, right?
Well, that's right.
ISR.
You try and get as many things stacked up as you can, and then it gives you, a higher probability of success, a higher level of confidence. So.
Yeah. So in this case, we definitely have to watch that level along with the pattern, which would be the half square. So if it breaks that, we get stuck under the half square. We're probably going to take out and make new lows. So that's just how it looks like.
Agreed. So let's talk about the message from the commodity. Today, when I was reviewing all the commodities and looking through, not only the dailies, but looking at the weeklies, looking at the monthlies, looking at the 4 hours, it was as we were talking about when you were your review, Barry. It's just they're not quite done yet. Some are, and they're all at different stages. Some are further along. They've had a washout, like copper and cotton. Others are, just finishing up a bottom or trying to put in a bottom, like coffee. Or crude. Natural gas has had a bottom. It's bounced up off, and now it's bouncing around. They're all in different stages of hammering out their bottoms, but they're not quite there. And a little bit of sort of technical analysis, but also a little bit of feel. You can just sort of see the price action and feel the price action. It's saying, we got to have it looks like there's a blower. That being said, I wanted to go over 3 charts: silver, sugar, and cotton, just to show you what probabilities are saying may happen there, and what they're in different stages, but they're charts that are a little more bullish, have had some time off the bottom, and they're showing signs of life where even with another push, we may still get a higher low to be able to trade off.
Right.
So let's dive into it. So this has been a star since late summer, early fall. We put in that low, we've pushed up, we made a series of higher highs and higher lows. But right here, it feels like to me, this was we had a square out. We just got stuck under the half square here, and now we've come down and tested the full square. It wouldn't surprise me if this could hold here, and just do sort of some sideways sloppiness. I mean, this was a big reversal yesterday. Look at that. We opened on the high and closed on the low. Right. We made a high inside bar, and then this big down bar. And then today we had a nice up bar, because this full square is really good support. I mean, you can see when you look left, there's a lot of price action that happened around there. And when it gets below it, this is when it had trouble and kind of made washout. So as long as we hold on top of that, it's bullish. I'm not saying it's bearish in any way. It just feels like we had this square out up here, and now we're going to see, and it was I hear, and I think we're going to see some of either sideways correction or pullback, into this half square. It could be deep, could just hold here. But I'm watching this. First thing, obviously, is when this trend line goes, you got to be concerned. And if this full square goes, you got to be concerned about a pullback. The market is really bullish. I think this low is good. This was one of the first commodities to bottom, and as you can see, it made a nice pattern out of here. It just feels like maybe this first push up is done, and we've got a pullback coming.
Right.
What do you see when you look at the silver chart here?
Well, I see from the September low, we went up 72 days, 72 bars.
Mhm.
So that's a good move. I mean, yeah, 72 days.
Mhm.
Didn't quite make 72 degrees, but 72 days. And that would, in that same square, 22 would give us the 50% of 72, 36 degrees up. And where do you have that? 22 is probably around your 50% line, right? Down below.
A little below here, like right around here is
Right
around
there.
22.
So I figure as long as we can hold above that, just like we did, like early December, I think it's in a strong position, not just firm, but strong position.
I agree. I mean, again,
If you look back on that line, you can see it going back to like September, far as you can see.
yeah, look at back in the fall of 2021, how important it was.
Exactly. So that's the key level, and we broke through it. You see how we broke through it with some strength. It
Yep.
wasn't some weak grind through it. It was so it looks good. See.
Yeah, I think it's bullish. I'm just, like I said, it looks like something may have finished up here. Like the first push may be done and we got to consolidate or correct. The consolidation will tell us a lot too. If we just go sideways on top of this, that's super bullish.
Right.
Or, Barry's level here, which is around 22, we stay above that, super bullish, the pattern would be.
Mhm.
So still a bullish outlook, bigger picture bullish, even bullish on the daily. Just think, timing wise and squaring out here just has me saying, okay, maybe we got to consolidate here for a little bit, during this mess that some of the other commodities going through in this sort of last push down in the other markets.
Right.
All right, let's jump to the next one. We highlighted sugar the last few weeks as a bullish chart. And it's another little piece of evidence that we can look at for why, the whole commodity complex may not be quite ready to take off yet. We've been bullish silver based on the fact that it's been doing a sideways correction for 12 to 18 months now. And then we started getting this series of lows and then a false break low, and then we pushed out of here and started making higher highs and higher lows. This week, just out of the blue, we had a strong push up. And this, if we could have closed above this half square, that would have been huge. Because you can see every time over the last year or so when we've tried, it's gotten rejected.
Right.
Multiple times.
Mhm.
And, it's hanging tough and it's trying. But again, we closed the week and the day under that half square. So this, again, just like silver, may have finished this first push up. This may be the finish here. We may end up calling this a false break and say, okay, this first leg up ended. Now what's the next correction look like? What do we want to see? We want to see it hold this full square. If we can hold this 1890, call it area, you can see how important that's been throughout this whole correction. We would be in basically, if we stayed above that, we'd be in the upper half of this whole band that we've been in for the last 12, 18 months.
Right.
So again, bullish on sugar. Just think this kind of price action, which we saw here at a really important spot, is dictating a little caution. We want to watch the pullback, watch what happens. Do we consolidate? Do we get a deep pullback? Can we hold this full square? If we can, then the bullish prospects look even better. What do you think about sugar here?
Well, I was looking at sugar just as you were talking. It's if you take the 2020 low in April, and these highs up here are, it's basically 270 degrees up from those lows. So,
Mm-hmm.
I would say let's see here. Long as we're above, let's say, 18 and a half or so, I think it's in good shape. I understand holding that square would be great. I would say holding the square, it puts it in a very strong footing, right? I mean, ready to break. But even if it pulls back a little bit towards 18, 18 and a quarter, 1850, it's still in good shape relative to that low in 2020. So
And
also here, it's good. It's in a good spot.
Yeah, interestingly enough, your 1850 is the eighth square. It's just one more eighth beyond the full square, which is the normal sort of leeway you give price. So,
well, that would be the area to come back and test the that triangle that he broke out of. So,
so we'll see. It's still we're still bullish. I'm still bullish on it. Just a word of caution with the price action we saw sort of going into this break and then the pullback. So it's just saying not quite ready yet. Not yet. Last one. Let's go. Cotton's an interesting one. As you can see, very different correction than sugar. Sharp downward correction. Right. We had a big move down in cotton. It actually squared out 180 by 180 here on this daily, which is a pretty significant square. We had a beautiful push up out. Now I drew in this ABC because I'm thinking, maybe this is what we're doing, right? If this was the low, if this was a good low, and we can do some sort of ABCD down, have a little more weakness if we get that push down in commodities that I'm thinking is coming. Most of the charts are saying is coming. Maybe we get the push down that gives us the higher low, and then we get the blast off after it. I like the way cotton has been acting since this low, right? We had a real fast move out of here, and now we're sort of getting this sloppy, choppy consolidation / correction. And look where it's been resting. Essentially holding the half square, which is nice.
Right.
If we can hold that and we can't even get down and finish the ABC, that's a really bullish sign here for cotton. That this low is good and we've turned the corner. Now, the other possibility you have to be aware of, just like all the other commodities that I said kind of need another push down, we could fail here, push down, and do some sort of false break right into the full square. So you got to be aware that that's an additional possibility here. Either way, again, we're getting close to the lows. We're trying to triangulate them. We're trying to find a spot where we stack enough odds in our favor with a good risk reward ratio to jump in here and trade the long side on cotton. Anything else to add here on cotton, Barry?
No, I think we're good. It's been a really good move up. We squared out at the high. I mean, the cotton chart is just technically just killer. It's really good.
It's very harmonic, isn't it?
Very harmonic, and I like the low that came in. So I think this is the time to think about getting some kind of positions in. But I'd like to see this. If there is a washout, I'd like to see it get done. But if we take out, that little triangle, that downtrend you have there, if we take that out decisively, I think it's
like
time.
Up in here.
Yeah, then I think it's time.
Because as you can see, when this thing runs, it runs.
It runs, yeah. And there's no time to be chasing it. So
no, or waiting. No, you definitely want to get on it when it's ready to go, and that's what we try and do. I know we talk about pivotal weeks, Barry, but given the price action you saw in ES late this week after the Fed, how do you see this week stacking up in terms of importance?
In terms of, you broke up there.
Sorry, in terms of importance in defining sort of the next leg of the market in specifically the S&Ps.
Well, I think it really feels like, we messed around for a whole month. So it just, normally we don't really go on for that much longer unless it's summer, sometime in summer.
Right.
We're coming into, the end of the year, next 4 weeks, we bridge into next month, New Year. So I just can't see this continuing to chop. So I think we might maybe top or bottom next week and then maybe pick a side, So it's possible we go down, test that 3,800 area and maybe maybe flip around. So we'll have to wait and see. But I think we're getting closer to a time of trending sooner than later. That's what I feel.
And I'm with you there because the commodity complex is sort of saying the same thing, is that we're close, but we're not quite there. Like we need a definitive move, like a washout move down, or we need a move up to sort of take out some resistance levels to say, okay, the trend has turned. The bottoms that we've been identifying are good. It's just it's kind of in no man's land still. So that's the struggle. And if I know you focus on the S&P mostly every day, but in looking at that, if that's the message you're getting from there, then I think it sort of fits from a macro perspective with what's going on in these other markets too. So we'll see. It's never a boring week, that's for sure. Even the chop is gets you on the edge of your seat.
Yeah, well, the moves are good. I mean, they're tradable if you use the fuse lines and stuff we use during the day. It's just not a confidence building kind of pattern on the daily. So it's just
no, and it points to the fact that you got to grab it when you got the profit, especially if you're trading the short term stuff, because in an instant they can reverse it and just rip it away from you.
Exactly.
So anyway, we'll see. Good review this week. Good show. We'll talk to everybody soon. I hope you have a good holiday season, and let's see if the market is running during the holidays, because it's possible. If, as you said, things start trending, it may do it in the holidays. We'll know soon.
Right.
All right. Take care, everybody.
All right. Very good. Thanks.
Thanks, Barry.
Good job.
All righty.
We'll talk to you next week.
Thanks. Bye-bye.
Bye.